Hey, greetings, everyone. Aloha from Hawaii. I just want to talk a little bit today about Gamestop and everything that's happened this week. I can't help but be reminded of an event that took place in the late 1970s and early 1980s. For those of you that are younger, I'm sure some of you may have read about it before, but you might have heard about the Hunt brothers and them, what was considered to be cornering the silver market at the time. So the Hunt brothers were basically out of Texas. They were into a lot of different businesses, but mainly oil. And Bunker Hunter was, in the 60s, I was actually considered the richest man in the world. He had a brother, Herbert and Lamar. And in the late 70s, I think Bunker Hunter and Herbert Hunter each owned about 21 million physical ounces of silver each. And Bunker Hunter in the futures contracts owned another 40 million, and Herbert had about 20 million. So for every dollar that went up in the price of silver at the time, they made about $100 million, which is pretty substantial. And the price of silver went from about $6 in early 1979 to a little over $50 by January of 1980. They actually controlled about 69% of all the futures contracts on the COMEX, which was the commodities exchange. Now they owned probably, I think, between the physical silver and the commodities, they owned about $6.5 billion worth of silver, but they actually only spent about $1 billion on silver and themselves of their own money, and they had borrowed the rest of the money from about 20 different banks. So, and if you remember back in the early 70s, in 1971, when you think about how our money had always been backed by gold and silver, President Nixon got us off the gold standard at the time. And matter of fact, it was illegal for years to buy and sell gold in the U.S. And so I think the Hunt brothers kind of turned towards the next best thing, which was silver. From what they've said, they basically just believed in the value of silver and the value of a tangible commodity. And if you remember in the late 70s, the inflation rate and the interest rates were astronomical. So basically in January of 1980, the COMEX basically capped the futures to 3 million ounces per person. And like I said before, Bunker had over 45 million, Herbert had over 20 million. So when they made that decision, they basically had 1 month to comply with that. And that was on January 7th. Well, 2 weeks later, on the 21st, the Chicago Board of Trade, they couldn't even wait a month. Basically, they suspended all buying of futures contracts on silver. Sound familiar now? You see, you're making the connection to GameStop? So basically, people could only sell the contracts, but they couldn't buy it anymore. And what happened was that the Hunt brothers in the banks that they were involved with, the banks obviously were aware of what was going on. So they were concerned that by the price dropping down, I think by early March, the contract, the price of silver had gone from 50 to about 30. And by the end of March, around the 27th, it went down to just under $11 an ounce. So by them not allowing people to buy and only people to sell, it drives the price down. And all of a sudden, the banks that had loaned the Hunt brothers all this money, they're getting worried about their wealth, right? And they wouldn't accept silver as payment. Now, the Hunt brothers, if you're familiar with futures contracts, once they expire, you have to take delivery of the physical silver. Well, they actually preferred that. So they let the contracts expire, and they flew the physical silver over to Switzerland to put it in banks over there. So there's different views on, well, let me just say this, is that all of a sudden the Hunt brothers found themselves in a world of hurt. They were being sued by mines. Their cash flow was non-existent. They had lawsuits kind of coming from everywhere. And you basically had some of the richest people in the world, by the kind of, mid 80s, I think around 1988, that Bunker Hunter was once the richest man in the world, went from 16 billion to less than 10 million. At one point, he had 500 horses. And so, he was hardly broke, but, you see what the system can do to you. Now, a lot of people say, well, they were manipulating the market, but if you were to ask them, they just said, we just believed in the free markets. We believed in the value of silver, and we were wealthy, and, so we bought a lot of it. Now, surely people with that much money and with that much power, I guess, by controlling a lot of the silver, it put them in a power position. But, the question that we're asking this week with GameStop is the same question that people were asking back then, is what right did the Chicago Board of Trade and the COMEX and the CFTC, the Commodities Futures Trading Commission, what right did they have to get involved with the Hunt brothers and the commodities that they purchased in the free market? I don't know. So fast forward here, we're looking this week at GameStop, and what do you have? You have kind of the same thing. You had a bunch of people that figured out that the GameStop stock was being shorted to the tune of 140% of the shares that even existed. So, I'm here in Hawaii. I wake up, I have a full-time job. I start at 7 in the morning. Depending on the time change at the beginning of the year, I wake up at 2:30 in the morning. Right now it's 3:30 in the morning for the market to open at 4:30. A few months ago, it was 2:30 because the market opened at 3:30. And I trade every day, so I kind of understand stocks. And I don't think anybody wants to see this. I don't want to, beat this dead horse, but bottom line is Robinhood of all the stock trading apps with the name Robinhood, right? Steal from the rich, give to the poor. Well, what do? They stab their own customers in the back, and they did the same thing. You know, they basically were the equivalent of the COMEX and the Chicago Board of Trade saying you can't buy it anymore. Well, if you can't buy it anymore, I wonder what you can do with it. You can sell it. So if you only have a bunch of sellers, so, you know, and you have no buyers, well, what do you think? What do you think is going to happen to the price? Or, you know, if the reverse was true, if you had any kind of product out there where there were, you know, let's say there were 10 of these products, rare cars, whatever you want to say, but you have 1,000 people that want it, well, you know, the person with the highest amount of money is going to get the product. Well, the reverse is here true. If you only have sellers and everybody wants out because they realize, it's probably going to be going down in the next few days, then what do you think is going to happen to the price? Well, it goes down. But who does that bail out? It bails out the hedge funds that shorted the stocks. If you don't know what shorting stocks is, it's basically borrowing a stock that you don't own. So if I go in the morning and I want to short, if I think Apple stock is going to go down, but I don't own Apple stock, I'm with Fidelity trading. My account is with Fidelity. If I don't own Apple stock, but I want to short it, I can basically borrow the shares from Apple. Let's just say, I don't know what the price is currently, but it's like $140, something like that. So basically, if I borrow it, I can sell it right away at $140 if that's the current price. But I think it's going down. So if I borrow, 1,000 shares of Apple at $140, $140,000, but I think it's going down, and it goes down over the next couple of days. It goes 140, 135, 130, 125, 120, and it starts to go up, or let's say it goes down to 118, and it starts turning back up again. Well, I have to pay back those 1,000 shares to Fidelity because they let me borrow it, but I can borrow it. It's at 118, and I decide to go ahead and I have to buy it now. So because I have to pay those shares back to Fidelity. So I go in and I buy it. I happen to get lucky. I hit it right at $120 a share. So now I basically have 1,000 shares that I bought, but I owe them to Fidelity. So I give them back their 1,000 shares. They're happy. Okay. So I sold it at 140, but I only paid 120. So I keep the difference of the $20 per share times 1,000 shares. I just made $20,000. So what happened with GameStop is that their shares went from whatever it was, $5 or $6, and they realized that all of these hedge funds had all 140% of the shares that are even available, because some of the brokerages, for people that actually own them, some of the brokerages are actually loaning them to people to short them. So some people own the stock, and some of the brokerages, I'm not talking about Fidelity, I'm just talking about some of the other ones, but some of the ones where their own customers own it, they're actually loaning it out to be shorted. So what was happening was 140% of the GameStop stock was being shorted. That's insane. It's criminal and it needs to stop. But these guys figured it out. So what did they do is they got, I don't know how many thousands of people it was. Was it thousands, millions? I don't know. But they decided we're going to go in and buy it, because if everybody buys it at the same time, you got these hedge fund guys sitting in New York City and they're watching it go down, and every time it goes down, they're just like, oh, we short it. And as it's going down, they're making more money and more money and more money. And all of a sudden, you get this flood of people coming in. So let's just say that, GameStop was down from, 10 to 8 to 6, and the shorters kept pushing it down to 3, 2, $1.50, and these guys are just getting rich off of it. And all of a sudden, you get a flood of buyers coming in. It goes from 150 to 5, and all of a sudden, the guys in New York, they got their hand on their mouth, and they're trying to buy it, and the thing just goes boom, boom, boom. It goes from 5 to 10 to 15 to 20 to 25, and then they have millions of shares. And all of a sudden, they're trying to buy it. They're panicking. And the next thing you know, it's $500 a share. And what did they pay for? Because here's the thing with shorting is you have a limited amount of time to pay it back. And I'm talking days. So if it starts going from 5 to 10 to 15 to 20, you could sit there and go, I think I don't want to pay 20 because I'm going to lose a lot of money, because I borrowed it at 10 and it's at 20, so I'm losing a lot of money now, but I've only got a couple days to pay it back. But so they can't sit around and wait, because they have two choices. They can either pay the 20 and lose a lot of money, or take the risk that it's going to come back down to 10 and maybe 8. But what if it goes to 100 or 50 or 100 or 200? They have to buy it. And they only have a couple of days to do it. That's what it's called. It's called a short squeeze. And in stocks, what happens is you have people that are betting a stock's going to go down, but you have also buyers that don't own anything, and they're watching the price go down, and they think, GameStop is normally 6, and it goes down to 4 and 3 and 2, and it's $1.50. So it can't go much lower. So here's what happened is you have two different groups of people. You have the people that are value buyers that see it go to $1.50 and go, I think that's at the bottom. So they decide to buy it. Now you have actually a third group now of people that are looking, the squeezers. Well, I don't even know how to describe them, but these guys that on Reddit and all these guys that decided that they were going to stick it to the hedge fund, they're coming in and buying. The regular normal buyers that don't even know what's going on, they're just, hey, it's $1.50. Hey, if it goes up 50 cents, I'm going to make a good profit, or if it doubles, I'm going to do pretty good. They have no idea that they're about to buy it at the same time that this whole thing is about to go crazy. And then when those two groups start buying, all of a sudden the squeeze happened. It's a squeeze on the hedge fund. That's why they call it a short squeeze, because now it's squeezing them. The stock starts popping up. And then what I just described a few minutes ago was, where do they decide to buy it? Do they think it's going to go back down again? If it's above at what they borrowed it at, if they borrowed it at 10 and they got to pay it back, if it's now at 15 and 20, they got to make a decision. Do I buy it and lose a lot of money, or do I think it's coming back down again? I've only got a couple days to pay it back, or all of a sudden I got to start giving my brokerage a whole lot of money. It's what they call margin calls, right? So the thing goes from, from $5 or $6 up to 50 and 100 and 150 and 200. And all of a sudden, I think that the last number I read was that the hedge funds lost $16 billion. Well, where do you think that $16 billion went? It went to all these small investors that got together and decided that they want to put the squeeze on the hedge funds, and they did it. Now, the interesting thing is what are they going to do about it? You don't think in the hedge fund managers and all the guys on Wall Street are thinking to themselves, I wonder which stock is next. Who are they going to target next? So So in a weird way, I'm trying to think of it from a stock buying point of view because I get up and I trade stocks every day. So what I'm trying to say is that short selling, it may have some value. I don't want to get into that, but short selling in general kind of pushes the price of stocks down. So I'm thinking in my mind today that I got a feeling there's a lot of the hedge funds and these big money managers in New York City that they've got to kind of get out of short selling because it's going to become like super risky. So I think some stocks are going to keep popping. Now, Gamestop was up to 500. And I think it closed here. Let me look here. I'm going to look right now. Well, closed at 325 yesterday on Friday, and I don't know what it did after market, whether it went up or down. I think it was going down a little bit, but it's still up around $200-300 now. The thing's been like $3, $4, $5, $6 for quite a while. Is it worth that? I don't know. At some point, I think it's probably going to come down. I certainly wouldn't buy it right now. I think it's way too risky. But there's other stocks they're doing it to. They're doing it to AMC theaters. They're doing it to Express clothing stores. But now you have Facebook coming in. They had a group on Facebook of investors that had 150,000 members to it. And what do? They delete it. Same way Parler was deleted. Can you believe it? So here they go. Here's the billionaire Mark Zuckerberg. What does he do? He goes in and billionaires protecting billionaires, right? So in a weird way, the class warfare is on. It's on. And I don't know that they can control this. How can they stop it if people decide to pull together? Now the politicians need to maybe get involved, because what really needs to happen is a short selling. I don't know that it needs to completely disappear, but I think that it needs to be capped percentage-wise on the float of a stock. And then when I think about that further, well, what are they going to say, 10%? Well, if I'm a short seller, all right, I guess I could live with that. I mean, there's 10% of float that's available, and in a weird way, that will make those 10% of shares of a company kind of valuable, because you might have at certain times, as stocks are maybe peaking, that the short sellers are going to realize, okay, now I kind of want to short sell, but there's a limited amount of them, of the shares available. But I think that's more fair than hedge funds and the big money in New York City being able to short 140% of a stock. I mean, that's ridiculous. So I think you're going to see some stock prices rising. And from a stock buyer's point of view, well, where am I going to find them? Well, if you go to, a lot of these websites, FinViz and Yahoo Finance, and there's a whole host of, even Fidelity, or probably most of the major brokerages, they have, they have all the numbers on all of these individual stocks on their website. So I can go to Fidelity, see how much float is in a stock, maybe see what percentage of it is shorted. So if I wanted to find out maybe what stocks might be going up, I'm thinking maybe I had to find these stocks that have a super high percentage of shorting the float, especially if it's over 100%, because I got a feeling that maybe those companies that are involved in that might just decide to run for the hills, which is a good thing. Excuse me. So it'll be interesting. It'll be interesting to watch here in the next couple of weeks. But wow, what a week! But this is I think it's a big deal. It's a big deal. I'd like to make one other comment, and I've told my friends this for a while, and I've thought this for a while, but I think in politics in general right now in this country, people are having a hard time finding the middle ground. And it was interesting to see Ted Cruz and AOC, even though there was some dirty words exchanged, when it came to this topic of GameStop and shorting, is they actually agreed. And I've actually thought for quite a while that the liberals, and conservatives have a lot in common. And basically, I think most like the Occupy Wall Street, those are the people I'm thinking of. That performance issues thing kind of freaked me out there for a second. Occupy Wall Street, remember, they were all against, the big money, the bank bailouts and all that stuff. And, I think conservatives are against that as well. I don't know a conservative which I have some friends that are conservatives and friends that are liberal. I don't know a conservative that would want a bank bailed out. And I don't think liberals want it. And I think that this GameStop thing this week is kind of exposing that. I think in a good way. I think there's actually some common ground that can be found here. I don't think companies should be able to run multi-billion-dollar deficits. You wouldn't run your household like that. I don't run my household like that. Debt is a prediction of the future. No company, but you talk about these Ivy League, accountants and all these people that work for these companies that are supposedly professionals, and companies are running multi-billion-dollar deficits, and it's allowed? Are you serious? Like, it needs to stop. I mean, companies need to get their house in order, And I'm going to give one last analogy here, and then I'm going to go. But I'm going to think of I talk about how we manage our money in our household. And if you're married, and just to be politically correct, I'll do it, but, if you have a spouse, so if you have a couple that's married and one of the spouses has a gambling problem, being it the wife or being the husband. But since women like to shop, I'm going to go ahead and say it's maybe the woman that has the credit card problem. But anyway, so let's say between the two of them, they each make $50,000 a year, and the wife goes out and she spends $200,000 on a credit card in the 1 year. And this is the analogy of what the government is they take in whatever it is, they take in, how many trillions of dollars a year, 3.5, 4 trillion, whatever it is, and they spend 5 trillion. So if they take in 4, they spend 5. So they're running $1 trillion deficits every year. And I remember Joe Biden in a video speaking to a crowd, and he said, "Are you telling me that you need to spend money to make money?" He says, "Damn right I'm telling you that." Well, there's some truth to that. When you spend money, it does create wealth, I guess, for the place where you purchased a product. So bottom line, here you get this family. So the husband goes to the wife and says, "Honey, like, we make $100,000 a year combined, but you're spending $200,000 this year. Last year, we basically had no debt, and now we have, we paid off a little bit of it, but you spent $200,000, and we had to take our $100,000 and pay for our house and cars and all that. So, we're still $150,000 in debt. And she says, yeah, but I'm stimulating the economy. I go to the hair salon, I'm going to the jewelry store. I went to the Coach store and bought some purses. I went to Victoria's Secret, I'm buying perfume. I'm stimulating the economy. And that's what bad economics does. Because, yes, you can say you're stimulating the economy with money that you're borrowing, but the husband says, yeah, okay, honey, yeah, you stimulated the economy of all the places that you went shopping, but look what you're doing to our family. Look what you're doing to our family. You're putting us in debt. And this is what the federal government does, is they take our tax money, they spend it foolishly, they spend more than they take in, and they say that they're stimulating the economy every time they give you money, and they're giving these stimulus checks away. And yet now we're 20 trillion, 25 trillion. I think I looked the other day, I thought the number was wrong when I looked. I thought it said 27 trillion, but I think that's what it is. And at some point, if that family keeps spending $200,000 a year, what do you think is going to happen to that family? They're going to have turmoil. They're going to collapse. It's like living on payday loans, and that's what is happening in the U.S. is the matter of time before that piper has to be paid. When the federal government prints the money and all they do is take care of the people around themselves in Virginia and Washington, D.C., all of those people are getting rich. And meanwhile, the American people are not getting rich. The definition of inflation is the increase in money supply. And as they keep printing the money, the Federal Reserve, remember when I talked about Nixon in 1971? That's the problem. That's the problem. You want to get back to try and find out where this all started. That was the problem. When they got off the gold standard, like our forefathers said in the Constitution, to coin our money in gold and silver, pre-1964, the dimes and the quarters were 90% silver. Up till 1968, they had what they call clad silver, where they were 40%. But when you took that restriction off of the government, basically the federal government goes in, they print as much money as they want, they take care of themselves, but by creating all that money, they create the inflation that the middle class in this country have to pay for. And what you're seeing right now is a revolt, and I hope they win against these scumbags in Washington, D.C., because they deserve it. And they need to, the credit cards need to be cut up in this country. And people have figured this out a long time ago, and it's like they don't know what to do. And I wonder if it's too late. Is it too late with $27 trillion in debt? I mean, how do you go in and how do you fix that? Without cutting spending. So the problem is with the Democrats and Republicans, if you cut social programs, the Democrats cry. When you cut the military, the generals come out and say, oh, we're in danger. And that's what politics is. They just won't stop. They won't stop. It's a sickness, and it's going to collapse. Remember Greece a few years ago? They had 160% debt to GDP ratio, and they closed the banks, and they told people that they can pull out $40 a day. Well, guess what? That's going to happen in America, because the dollar is becoming more worthless and more worthless. And as prices keep rising and the stock market keeps going up and all-time highs in the NASDAQ and the Dow, and it just never seems to go down, well, the piper is going to have to be paid. And use wisdom. You know, if you have any sense of what's going on, if you have any sense of finance and what real money is, I don't know. It's hard to imagine how this is going to end well, you know. And I'll leave you with this, you know. Is, you know, look at whether you're a parent or a grandparent or not a parent at all. But if you have kids or you have grandkids or you have kids, you know, think about their future and think about who you're voting for, because I fear for them. You know, I'm 60 years old and I might be here for another 10, 20 years, maybe a little more if I'm lucky. But I think we're all going to look back and wonder what we're doing with the way we spend money in this country, with the political environment. And I see the sides of what some liberals are saying when it comes to big business and banking and the corruption. And I see what the conservatives say about the same people. And if anybody thinks that either side agrees with that, they don't. And this whole thing with GameStop this week is a good reminder that we have more in common in America than we all might think. And it's time to come together. And the first place to start is to stop this money manipulation on Wall Street. And let's put an end to the corruption. I have no problem with the stock market. I love it. Nothing would motivate me to get up at 2:30 or 3:30 in the morning every day, because I love numbers. I love finance. I love the way stock market trading just incorporates everything that I love. I love politics and geopolitics, what's going on in the world, how everything affects everything. But if we don't have a fair system, we're doomed. We're doomed. So no matter what side of the aisle you're on, let's come together, people. It's time that we do that. Anyway, thanks for watching. This is basically my first long-winded blog, but I've been thinking about it for a while, and I have a few more ideas. I may put some things up here in the next week, but you know, stay safe, use your brain, and let's come together as Americans, okay? And see you next time, okay? Bye now.